All right. Good morning, everybody. 21st of January. Look at this. Wow. You just need to know that Trump is in control right now. See the way the market just moved yesterday? Is Trump effect. The Trump effect is officially back in the office and officially back in the market. So expect major moves from the market, basically, from what Trump tweets, from his moves. He's a businessman at the end of the day. He knows what to do to the market, how to move it. See, the whole time everybody was expecting that the dollar would go up the and the gold would go down, but then it didn't happen. So yesterday we were looking for buys above the 2707 area. I actually took a buy from this point, went to take profit one, which was okay. But then the rest of the two orders, oh boy, the market came back to, started playing around. My stop loss was just below. Stop loss is around this point, and the market was playing just within this area. Almost got snipped over here, actually. So I had to close them, actually. After this consolidation, I was like, you know what? I'm just going to close with minimum loss. Just close both of the orders. Look at this. What happened from 8 a.m. 8 p.m. Sorry, the market went up, 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 continuous candles up to this point, right? So either way, anyone that held this trade for maybe decided to risk big and hold it was not part of that. Congratulations. Because either way, our analysis was correct. You see, at the end of the day, it doesn't matter how much. It doesn't matter how it's not about the profits as much. It's about consistency. All right. The more you're consistent on something that you're doing, the more profitable it becomes. So, but if you chase profits, you may end up losing consistency because you learn. If you lose today, you want to do something different tomorrow. But maybe the problem was not even the analysis that you did. The problem maybe was the market. See, like right in this case, we did a very good analysis. We were looking for buys above this point, but the market decided to become the market. It became the problem, started consolidating within this range, consolidating around this area, spiking down to tap stop losses and coming back up like that. But then eventually, it still went to take profit one, two, and three. You see, eventually, our analysis was very correct eventually. But then it took time to do that and a lot of uncertainty to do that, a lot of ranging all the day. This is the whole day yesterday. Ranging. All right, let's go to today. Let's see. That's done, dusted yesterday. Officially, Trump is in office. Let's expect crazy movements now as we go on. Yeah. All right, let's see. We have Canadian CPI today. We have nothing on the dollar, definitely, but expect the dollar to move, definitely, of course. From 3 p.m., 4 p.m., the New York Open, expect crazy movements. All right. So we're gonna remove every single thing over there, single analysis, and we start afresh. We do a quick one. Ooh, all right. Let's see. All right, so we still have the monthly resistance, monthly support at the same area. The market hasn't really changed. It hasn't broken any support and resistance on the monthly area. Let's see. All right, so the monthly resistance, monthly support still on the same area. Weekly, we still have this low over here. The highs over there, and that's where the market is still dilly-dallying around that area. Daily, in terms of daily, we got a new formation. All right, we were gonna pick this one as the daily support because the resistance is on the same area. When you go to 4 hours, we're gonna consider this as the 4 hours support. Resistance is the same area where the market is. We're gonna consider this as the 1 hour support. That is what happened yesterday. And it's very important for us to say that there was a break above this point, right? You see something like that? See the way I'm analyzing this market, I'm making it way easier and easier and easier for us to continue pulling out. So basically, it's like the market just broke. No, I'm doing this so that I can actually mark that point. And that's where the market is right now. You know, that's where the market is right now. All right. So here's the thing. This is the weekly resistance. And the weekly resistance is just getting broken above. There's this candle that closed above. And then we have this candle that is happening right now. This is the current candle right now, the current 1 hour candle. So let's go to 30 minutes and see how it's behaving. Okay. All right, good. So we have this low over here. You have the low where the bodies are over there. And we have a high that just formed over here. All right. So this is weekly resistance. It's actually getting broken. In terms of, if we look at it from the weekly bit, it's not broken yet. But since we're on a lower time frame, that's why we're seeing it as broken. But I want to do something. I want to do something like this. Yeah, I want to interchange them so that this one doesn't make us confused. All right. So this is the 30 minutes resistance, 30 minutes support. The support is over here. 15 minutes, we can take a peek and see the market is just inside there, blah, blah, blah. Nah, no need for all of that. All we need to do is to know is that over here, we're going to need the market to break below this point. All right, so I'm going to say potential sells below this point, below the 27.22 area. And should we break above this point? Because now this one was supposed to be like that, and then we get something like that, all right? So if we break above this point, potential buys above the 27.29, it's going to be a very good move. Why? Because the moment this candle goes above this point, it means it has already broken the weekly resistance. And we break the weekly resistance. Let's see what we're looking at on the left. By breaking the weekly resistance, all right, this is supposed to come down to this point, and this is the one supposed to elongate over there to mark that one. All right, so by breaking the weekly resistance, what do we have? Let's see. We have this area, we have this area. I'm just marking those areas, I need to see them. We have over here, we have over here. Good. All right, so let's go back now and see what we have. Let's go back and see, go back and see, go back and see. All right, so here we are. So should we break above the 27? This is great. We break above the 27.29 area. We're going to go all the way to this point. All right. All right, we're going to go up to this point first. Let's see. Yes. So we have TP1, TP2, TP3. Actually, this will be the ultimate trade. Should I get this? I'm going to execute it on a very big lot. It's going to be a very nice trade. My stop loss, we want to put them just below that point over there. Has to be below this weekly resistance. And as the market continues going up, I'll continue adjusting it down. For the sells, I want to do sales from that point that I've marked over there, over here. I do the sales from that point and bring them out, bring them down over here. TP1, And TP2, this gonna be clean as well. Should we break above that? We go to TP3 down here. We break below that, not above. All right. Anything below that, you're gonna go down continuously to that point. All right, so buys above 27.29. 27.29, we take a buy, push it up, 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 take profit 1, 2, 3. Sells below 27.22, 1, 2, 3, down there. Good. So that is what we have. That is what we're looking at, and that is what we're keeping an eye on today. Already gold is up 0.69% today. That is some good moves. All right. So let's keep an eye. Let's watch. Be very careful. Now Trump is in office. At least you just have to be a friend of the Trump tweets now. Just need to be going to the tweets and check them before the market opens. All right. All right. So let's meet here tomorrow, do this analysis. We see how the market will go. Good luck, everybody. Happy hunting. Risk manage well and trade what you see, not what you think. All right. Over and out. Bye bye, guys. All right. Bye.